Right now, as you are watching this, the US and Israel are at war with Iran. Tensions are escalating, markets are reacting, and everyone is asking the same question: what do I do with my portfolio? Well, actually, I have an answer. And it is not based out of gut feelings or headlines. I spent weeks crunching data on what actually happens to stocks during wars, going all the way back to 1990. And what I found is going to change the way you think about so-called war stocks. What if I told you that the biggest defense company on the planet, Lockheed Martin, actually loses money during wars, and a stock that most of you have always ignored went up nearly every single time in every single conflict over the last 35 years, with an average gain of over 23%. I analyzed 10 wars, 12 stocks across the US and Indian markets. I pulled historic data from Yahoo Finance and wrote a custom Python code to crunch all of it. So stick around because the results will surprise you. Hey everyone, and welcome back to MT Alpha. If you're new here, I make videos at the intersection of AI and the stock market, breaking down data so that you do not have to. So here's what I did. I took 10 major conflicts from 1990 to 2023. We are talking the Gulf War, the Kargil War, 9/11 and Afghanistan, the Iraq War, Russia-Georgia, Libya, Crimea, US strikes on Syria, and the Russian-Ukraine war, finishing at Israel-Hamas war. That's over 3 decades of geopolitical chaos. Then I picked 12 stocks split between US and India. On the US side, we have Lockheed Martin, Raytheon, Northrop Grumman, General Dynamics, Boeing, plus energy giants like Exxon Mobil and Chevron. On the Indian side, we have Bharat Electronics, BHEL, Indian Oil, ONGC, and Hindalco Industries. For each war, I looked at a 60-day window from the day of the conflict start. I compared the opening price on day 1 to the opening price on day 60, all adjusted for splits and dividends. All of this data is coming directly from Yahoo Finance. And to make sure that this analysis is repeatable and not just vibes, I wrote a complete Python program using Yahoo Finance library that anyone can use. Guys, this took a lot of time to put together. If you find this useful, a subscribe to the channel will mean a lot to me. It helps grow the channel and keeps content like this coming. Okay, so let's get into the results. And I'm going to start with the finding that shocked me the most. Well, Lockheed Martin, the world's largest defense contractor, the company that makes the F-35, the company most people would bet on during a war, only went up 4 out of 10 times during these wars. That's a 40% hit rate. And when it did go up, the average gain was just 5.5%. I had to double check this, and it gets wilder. US energy stocks, Exxon Mobil and Chevron, the companies you would think that they would benefit from war-driven oil prices spikes, only went up in 3 out of 10 wars each. Exxon's average gain when it went up was under 5%, and these are some of the worst performers in the entire study. Now here's the flip side. The number 1 stock across all 10 wars, Indian Oil Corporation. This stock went up in 8 out of 9 wars for which we had data. 8 out of 9. And the average gain when it went up, positive 23.4%. During the Kargil War alone, Indian oil surged almost 68% in just 60 days. During the Israel-Hamas war, it jumped up by 42%. And it's not just Indian oil. On the Indian side, BHEL went up 7 out of 9 times in these wars, with an average gain of nearly 22%. Hindalco, a metals company, also went up 7 out of 9 times, averaging over 17% gains. ONGC, India's oil and gas giant, went up 7 out of 9 times, averaging nearly 16%. Bharat Electronics went up 6 out of 7 wars, with data averaging almost 20%. The pattern is clear. Indian stocks dramatically outperformed US stocks during wartime. Look at this ranking. The top 5 stocks are all Indian. Every single one. And here you can see the full picture in this heat map from my report. Green means the stock went up, red means it went down. Look at how much green is there on the Indian stocks as compared to the US stocks. The data doesn't lie. Now, let's flip the lens. Instead of looking at it stock by stock, let's look at it war by war. There is one war where every single stock in our study went up, all 12 of them. That was the Iraq War in 2003. Indian stocks led the charge. Bharat Electronics surged nearly 37%. Indian Oil gained 18%. BHEL gained 18%, and even on the US side, General Dynamics climbed almost 12%. Raytheon gained 10% and Boeing gained over 9%. But there is also one war where everything crashed. The Russia-Georgia conflict in August of 2008. Not a single stock went up. 0 out of 12. Now you might be thinking, 2008, wait, wasn't that the global financial crisis? And you'd be right. The war happened right at the middle of one of the worst market meltdowns in history. General Dynamics dropped 25%. Boeing dropped 20%, Hindalco lost nearly 24%. Even the so-called safe haven defense stocks got hammered. The most recent conflict tells a different story. During the Russia-Ukraine war, 11 out of 12 stocks went up. Bharat Electronics led with a 30% gain. Chevron jumped 19% and Northrop Grumman gained nearly 13%. The only stock that went down? Boeing, which fell about 4.5%. The Crimea annexation in 2014 was almost as strong. Again, 11 out of 12 stocks rose. Hindalco surged incredible 45%. Bharat Electronics gained 30% and ONGC climbed 18%. So, what are the big takeaways from this data? Number 1. Don't assume the obvious play is the right one. Lockheed Martin and Exxon Mobil, the names everyone think of when they hear about war stocks, were actually amongst the weakest performers. Number 2. Indian stocks have been remarkably resilient and often explosive during global conflicts. Number 3. Context is everything. The Russia-Georgia war proves that even war doesn't guarantee defense stocks will go up. If the broader economy is collapsing, everything goes down with it. Number 4. The 60-day window matters. These aren't long-term holds. They are gains and losses that happen fast. If you are going to act on geopolitical events, timing is critical. Number 5. Consistency beats magnitude. Northrop Grumman went up 8 out of 10 times in these war periods, but its average gain was only 6.5%, 6.4% to be exact. Indian Oil also went up 8 out of 9%, but it averaged over 23%. Know what you are optimizing for. Now I want to be clear. These are historical analysis. They are not financial advice. Past performance does not guarantee future results, but when you let the data speak instead of your gut, you get a very different picture of what actually happens to stocks during war. I'm going to link the full HTML report in the description, and the Python code is open so that you can run it yourself, tweak the stocks, change the time window, and do your own analysis. If you have found this video valuable, please hit the subscribe button and drop a like. I put a lot of hours into this research. Your support is what makes it possible. Let me know in the comments which stocks or conflicts do you want me to analyze next.